Robert, I know this is going to sound controversial,
Heaven's sakes, no.
but did you know that anybody who had bought at a peak actually made money in real estate?
Well, I guess it depends on which peak.
And that's what we're going to be talking about on this episode of Real Estate Chat with
John Perez.
and Robert Eid. So we're going to share this FP Posthaste financial post haste. That's a bit of a tongue twister there. Rising home prices have sent property values soaring over the past 5 years. So when was the last peak? Obviously not the 2022 one. Before 2022, Robert. When was the last? 2017. Now, 5 years ago from 2023 is 2018. So after peak. Anybody who has bought in the past 5 years from 2018, well, I guess what they're saying is 5 years ago, it has amounted to hundreds of thousands of dollars in extra equity. So if you're looking to make money investing in real estate, we don't want to sound like one of those ads where we're selling you a course in investing in real estate. You can do that learn that for free or pick up some books about it. But basically, they're trying to say that homeowners in 15 major housing markets across Canada who bought properties in July 2018, so a year or so after the peak, have all on average seen their equity grow over the past 5 years. This was a study from Zoocasa, a real estate brokerage. And basically, they're comparing benchmark prices and all that. So a lot of fun stuff if you like reading numbers. But let's look at the visuals because I love visuals. Let's say you bought 5 years ago, depending where you are in Canada. We're going to focus on GTA because we're in the Greater Toronto area. So basically, the 2023 benchmark price, 1.161. We've seen that number before. Equity built 401,700. If you bought 5 years ago, you're sitting on almost $500,000, 400,000. And if you bought anywhere across Canada, here's what you would have made. So Greater Vancouver, you made shy of 200K. Ottawa, you made almost $250,000. Let's see, Hamilton, Burlington area, you made 314. Is there any place higher than Toronto where you would have made money? Probably not, right? So
well, percentage, Hamilton is higher on a percentage basis.
Percentage basis. On an equity built basis, well, obviously you have to put more money into Toronto. And then, of course, Edmonton, 20,000, Regina, 26,000, so on and so forth. We'll link this post haste in the show notes. But here's the real question for those of you still watching this at this point who have now clicked subscribe. Robert, knowing this, that people who have bought at peak 2017, other peaks in previous, which we're going to show you in a bit, knowing that buying on a peak makes you money, 2022 was the most recent peak. Now we've actually dipped below that peak. Should somebody buy now?
Well, they should buy now if they can find a property that suits what they want, and then they can negotiate a sale that puts the right amount of money in their, that takes the amount of money down payment that they have available and lets them pay a monthly payment that they can pay and they can qualify for, and find a seller who agrees to those terms. But why not? There's many people who think it's going to get worse in the future, and then there's an equal number of people that says, hey, it's going to get better next spring.
So here's the thing. Do we know exactly when it will get better? Or let's rephrase that question, Robert. Do we know how bad it can get so that anybody looking for secrets that they'll learn on Real Estate Chat, and they won't see this anywhere else, can we tell our Real Estate Chat viewers how bad it could get, but it couldn't possibly go below that price point? Do you think that's possible?
Is it possible? Yes, but we have to make a few assumptions of, well, if it starts to go bad, what will the powers that be that control interest rates, that control, therefore, the monthly payments, do as a reaction to ameliorate, to unflame the fire?
Exactly. So you know what we're going to do is we're going to look at Robert's interesting chart here, because there might be a way to tell how bad it can go and how good it could get. So Robert, you created this chart. It is inflation adjusted for those of you who have been watching this. And, average prices tell a story, obviously, but inflation adjusted prices will tell you the more closer to the full story as you need. But Robert here identified all of these before peak prices, subsequent peaks, current peak. Robert, why don't you take us a tour of this and then sort of give us an idea of where we're at right now? Does it make sense to buy And just like what FP Posthaste newsletter said, 5 years from now, will we be sitting in money? Will we be rolling all over equity built because we bought today?
Okay, well, this has got several peaks on it. One in 1974, one in 1989, and one in 2017, and one in 2022. And in between those peaks, there's a trough, and then it goes up again. So I tried to say, well, I wonder if we look at 1974 and we see that that money was just about the same as the money at the next trough. Does that tell us anything? Does the peak before the one we've just passed tell us anything about what the future lousiness is going to be? So if our previous peak from now, or previous peak now is February 22, if the previous peak was 2017, does that tell us, just like 1974 it seemed to, where the bottom is going to be? Now, the bottom there, 977, is still a bit below where we are now of 1008. It's $100,000. Is that the bottom? Each one of these times, there was interest rates up and down in between the high and low. So there's a lot of things that we're guessing about. We're just saying on the broad picture, can we say there's 21 years that's going to happen till the next peak, and it's going to go down a dreary low, swiggle along between 80% of the peak and 70% of the peak for the whole time? How far can it go?
So wait a moment, Robert. I just don't want to forget this question. So the article that was brought forth by Zoocasa's research is quite interesting because it talks about a recent peak. And obviously unique circumstances have happened over the past 5 years that have resulted in this. Mm-hmm. Whereas in the 80s, 90s, it took 21 years. Are you saying then, Robert, that we may see not a 5 year, you're going to be sitting around rolling in money, but this may happen over the course of 20, 21 years or more?
It's possible, but we've already had most of the damage. We're already down 20%. All of these indicate a fall off somewhere between 20 and 30%. So we're already at 20. So most of the worst has passed. So it falls off another 10%. Is the end of the world? No. Do you like it if you just bought in 2017? No, because you're just breaking even. But it's not the end of the world for most of the people. Most of the built inventory is people that lived there for like 15 or 20 years. So for them to lose the last 100 of a run up that took them from something that was 120,000 when they bought it to 1.2, and they lose and now it's only 1.1. Do they care? Well, they care, but it's not the end of the world.
It's a different story than if you're buying here. So I guess as human beings, we love to see patterns and we love to look at things like this to make sense. Would you say that in terms of Zoocasa's research, it's more of a feel-good article because they're trying to say that, hey, don't worry about it. You bought peak here and you're sitting on equity today. But as you said, Robert, what if all that equity from even 2017 peak buyers disappears? Forget about the 2022 buyers even, because it's already obvious what's happening there. What would happen?
Is it a feel-good article? Yes. And that's all.
Where do we take this information? So do we buy? Somebody looking to buy, should they be confident that at this point, that let's say, 5 years from now, you're not going to be featured in a Zoocasa or Financial Post article because you've made equity? It may not be 5 years, it may not be 10 years, but would it be relatively safe to say that at least we know where the bottom is? It won't go below roughly where 2017's bottom was after the peak.
Okay, that's what we're saying, is that if there's going to be a bottom, it could be 30% off the peak and we're already at 20. So yes, it's been a big run up, but don't wait forever and don't think it's going to take forever to reach the bottom. We don't want to tell our sellers anything different than we tell our buyers, and it's got to be the same information for both. So if somebody's going to sell, should they sell now? Well, it depends on what they're going to do with the money. If somebody's going to buy now, should they buy or should they wait? Well, it depends on what their circumstances are. Is there a pressing need? Do they have their family coming with them? What is this? The reason why they didn't buy 2 years ago? And everyone will have a reason. Maybe they didn't have the money. Now they've got a job again. There's a lot of different reasons. So if you can satisfy what you need right now, then you do it right now. You don't wait. Real estate is security of tenure. If you've ever been in a rented house where the guy says you got to move in 2 months because they want to sell the house, it's a chance to pick your neighbors. You can look around and say, I want to live near this school. I want to near this kind of people and away from that train and away from this kind of bad influence. And it's a 25-year investment. It's not something to buy and sell and flip in 2 years.
No, there you have it. So make sure that the most important thing beyond the charts, which Robert's chart gives a great illustration of how to recognize where things could go, is ultimately we don't have control over that. The government policies, interest rate hikes and drops, all of that sort of stuff, supply demand issues, things that affect the economy and businesses and all that sort of thing. But ultimately, if you believe in where you live, some of you may be living in other places in the world. If you believe in the place you live, the price of real estate there is a vote of confidence for that place. And so if you're worried, especially for those of you who are expecting that bubble to burst, massive burst, if you're worried about that here in the Greater Toronto area, you've got to be afraid for your job. You got to be afraid for everything that's around you that makes up your life. And so I'm not trying to say that everything's going to be rosy either, that, 5 years from now, you're going to be on an article like this. As Robert said, and there's certain benefits to home ownership. You do what's right for you. If you feel you're confident renting and you're okay with somebody deciding to sell their home because of the current financial situation and tell you to find a new rental, that's up to you. But make sure you click on subscribe. If you like this episode, click thumbs up. If you dislike it, click thumbs down. Tell us what you think. And thank you for watching this episode of Real Estate Chat. Take care and bye for now.
See you next time.